All right, guys, thanks for joining us here. I'm Danny Chhan with Aviara Real Estate. This is Mike Wise with Capstone Direct Mortgage.
Hello.
And as you read on the flyer, what is the biggest thing? The biggest topic right now is interest rates.
Yes.
Mike, you've been getting a ton of questions about this?
Yeah, exactly. So one of the things that's going on out there, I hear these like Facebook groups of people that are actually talking about the credit scores, and a lower credit score actually gets you a lower interest rate, and that is just not the case. So Fannie Mae and Freddie Mac, they came out with what we call loan level pricing adjustments. And while I don't agree with the loan level pricing adjustments that came out, what it does is it flattened the curve a little bit. So the people with lower credit scores, their rates got a little bit better, but in the long run, you need to have a better credit score. A higher credit score always gets you a better interest rate. So don't think that a lower credit score is going to get you that better interest rate, because it is not the truth. So there's a lot of misinformation that's going on out there. Sometimes where you put less down, you might get a better interest rate in that instance, but that's at that same tier, that same FICO tier. So at like a 740 credit score, you're gonna, at 20% down, you might have a 6.5 rate, versus with 5% down, it might be 6.375 as far as the interest rate. So you might get a little bit lower that way, but going down the credit spectrum, it's not good. You're gonna spend way more money on a higher interest rate because you have a worse credit score. So make sure you pay your bills on time and keep that credit score up.
So the biggest recap for that, Mike, 740 credit, 640, it doesn't matter. You're still always going to get the lower rate at the higher credit.
Exactly. Yeah, you're going to pay, you could pay a 0.5% more in interest rate with a 640 score versus a 740 score, or maybe even more. So you do not want to have that 640 credit score.
Yeah. Okay, great. Yeah. And to the next thing, a big question I've been getting a lot, which I know I've funneled towards you, because you usually have the answers for this: mortgage rates and inflation. So we're hearing these words in the news: inflation, 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 mortgage rates going up, up, up.
Yeah.
What are the effects of both? What happens with inflation and rates, and what happens when they go down?
The higher the inflation, the higher interest rates are. So you will have seen, even 6 months ago, that interest rates were at 7.5%. And that's because inflation was at an all-time high, and it just kept on going up and up and up. And what the Fed has done is they've actually increased what we call the Fed funds rate.
Okay.
That does not impact mortgage rates. What impacts mortgage rates is inflation. The Fed funds rate going up, it actually impacts the economy, and they try and slow down the economy so that they can bring down the inflation. So if you slow down the economy, there's not going to be as many people chasing after like those few goods, and so the prices will actually come down. That's inflation. So you go to the grocery store, the prices, when they're starting to go down, that's inflation coming down. And so what the Fed is doing is they're slowing down the economy to get it to a snail's pace so that they bring down the inflation. When the inflation comes down, mortgage rates will come down, and you have seen that, because now we're quoting rates that are 6.25% to 6.5% versus 6 months ago at 7.5%. So they're getting a hold of inflation. It's a little sticky and it's staying pretty high, but it's starting to come down, and we're hoping that real soon here we're going to see some lower rates because the inflation is coming down.
Speaking of lower rates, you just said the key word.
Yes.
When will we be back into the 5% range?
Yes.
When is that happening?
I can tell you for sure that this is going to happen.
Okay.
When is it going to happen?
All right.
I don't know for sure, but what I do know is that the prediction is that we are working our way down to the fives, the low 5 interest rates, possibly even get into the 4s.
Okay.
But that could happen later later in the summer. But I think for sure by the end of this year we're going to be in the low 5s.
So the impact is huge on that.
Yes.
Coming from my industry, your industry and my industry, clearly, we're tied together like this.
Yeah.
And you and I have seen this before, so we're already kind of prepped. And that's a big question that I'm getting from everybody, from sellers and buyers. They're trying to time everything. When is it going to happen? What is the impact of all this? So right now, and you've probably seen this, Mike, even though interest rates are higher, our inventory hasn't come back, which means the prices have stayed steady.
Stayed high.
So the impact of this is when rates go down, prices will go up.
Yep.
Because it adjusts for affordability.
Yep.
When people can afford them, they're easily able to afford the monthly payment more than the bigger purchase price.
Yep.
Or whatever it ends up being. But it's a sliding scale each way. So for the people that are waiting on the sidelines, it could be very detrimental to them, because if rates go down and everybody's back in the market, prices go up.
If you can, I mean, what we're telling people is to buy now and refinance later. So we do know for certain, like we just said, that interest rates are going to come down. If you can afford to buy a house right now today and you need to move, now is the time to do it, because there's not as many people. There's still a lot of people looking, and there's not enough inventory right now. But if you can get a house right now, it is very important, because not only can you get it at a lower price, there's not going to be as many people vying after that one house. So one of the things that Danny's talking about, as interest rates go down, there's going to be more competition, and if there's more competition, that's going to push the prices up.
And what's that stat that you said earlier?
Yeah,
it was a scary large number.
Yeah. So the stat is, if interest rates go from 6.5 to 5.5, so they drop 1% or just 1% across the board, there's 5 million more people in America that can now afford that house. And I'm not saying that 5 million people are going to put an offer on that house that you want, but what I am saying is that there's going to be a lot more people that can now afford that house that are going to go after it, and that's what we're talking about. It's going to drive the values up, and it's going to get more and more competition. And so that's why we're saying buy now.
Yeah, and get it done. So if you wanted to know what mortgage rates are doing, that's exactly what they're doing. And Mike's totally right. If it's not 5 million people in one house.
Right.
But if there was a house you were looking at today and there was 1 or 2 offers, there may be 5 or 6 when rates go down 1% or more than 1%.
Yeah.
So that's the danger of it. And what that ends up being is overbid, like we did 2 years ago, where every house had 10 offers minimum and prices were going up $50,000 or more.
$100,000
over.
Yeah, exactly.
So the key is to make the plan now, make the move, work your plan, and get it done.
Yeah.
If you guys are very interested in that, that's what Mike and I do, and we'd be happy to sit down with you guys.
Yeah, I would say, can I add one more thing there?
Sure.
Is that if you have a 3% mortgage rate right now, you can keep that if you want to. If you qualify and you can buy a new house, we can actually get you into a new house for maybe 5 or 10% down. So if you have the funds for a down payment and you can qualify for both houses, rent your current house out, have a positive cash flow on it now, because rents are high.
Yeah.
And so you're going to get a positive cash flow on it because your payment is so low. Then you can subsidize your new payment with that extra rent, and then when the interest rates do go down, we'll refinance you on your new property and bring that payment down as well. So there's definitely options out there.
Yeah, definitely. So. Mike, thank you for the information. That was very key. Even as a professional in my own industry, we need to know these things that are going on.
Yeah.
And I think the biggest thing is getting it down to the consumer.
Yep.
And making sure they're educated, because if you're educated, you can make the best decision for yourself.
Got to have the information.
Yeah, in that scenario. So collectively, Mike and I have over 35 years in the industry.
Yeah.
And we're both local Thousand Oaks residents. So if you guys have any questions, give us a call. We know the neighborhoods well, and we know the mortgages well.
Awesome. Thank you very much, guys. Have a great time.